In this video, I'll discuss Q1 FY26 result and Concall of Poonawalla Fincorp. So Poonawalla Fincorp is an NBFC. They deal with multiple products like MSME loans, LAP, loan against property, personal loan. They in the last quarter they launched gold loan segment. Then they launched vehicle loan, like also launched education loan. So they deal with multiple products. So that is the point with their product. And if I talk about their secured unsecured book, their secured book is around 57% of their AUM and unsecured is 43%. Okay. So let's talk about the result of Poonawalla Fincorp in Q1 FY26. In this quarter, they grew their loan by 53%, which is phenomenal growth. If we look at their loan book, in a high base like 35,000 book, they are growing at 53%, which is pretty amazing. Okay, they grew their loan book by 53% in this quarter to 41,000 crore. So that is the point with AUM. They are growing their AUM at a high pace. In the last few quarters also, in the last quarter they grew their loan book by 43%. And if we see their guidance in the last year was around 35 to 40%. Okay, I think it was 30 to 35% of AUM growth they were guiding us for FY25, and they outperformed their guidance by 15%, and now their guidance is around 35 to 40% for FY26. They gave the guidance last quarter. I mean, in Q4, in Q3, they were talking about 35 to 40% of loan book growth over next few years, and now in this quarter they grew their loan book by 53%, which is pretty good. So in terms of growth, there is no shortage of growth, but let's talk about the other metrics. In terms of the net interest margin, not NIM, but it is net interest income. Net interest income grew by 10%. Okay, in this quarter, NII grew by 10%. Okay, but if we look at their AUM growth, their AUM grew by 53%, whereas the NII grew by only 10%. So why there is a divergence between the AUM growth and NII? Because they are increasing their secured mix of their book. Because if we look at their secured mix, in the last Q1 FY25, their secured loan book was 49% of their whole book, whereas now it is at 57%. So if we look at the secured loan, we all know that if we do secured loan, the yield in the secured loan is lesser than the unsecured loan. So the net interest margin is lesser in secured loan. So as the net interest margin is lesser, the net interest income will also be lesser. So that is what happening in Poonawalla Fincorp, because they are increasing their secured book. So that is why their incremental interest income is lower. So that is the point with NII. Okay, and one other thing that see one thing, it is right that the NII is lesser in secured loans. Okay, but if you think as a long term, secured book will help Poonawalla to grow at a longer term, because it is about like few quarters, like when there is a transition from unsecured to secured book, the long the transition from unsecured to secured will happen. This will be the thing we can see, we could see in the future. But as soon as as soon as the transition from unsecured to secured completes in the future, like after 3-4 quarter, then we can see the divergence between the AUM growth and NII growth will be lesser. Okay, so that is the point we have to consider also, that as the book is growing at a high pace, as the book is growing at a higher level like 50,000, 60,000, then secured part of their book will help them to maintain their NPA asset quality. So that is the point here. So let's talk about the asset quality, which was, we all know that what happened with Poonawalla Fincorp in Q2 FY25. So in this quarter, their GNPA was at 1.84 level, which is flat quarter on quarter. And if we look at their trajectory of GNPA, the GNPA have settled down to a level of 1.8% for last 3 quarters if we look. Okay, so the GNPA is at a like stabilized a bit. So that is the thing with GNPA. But again, we have to keep watching the GNPA level at a very closely, because one thing is that they are launching new products, like they launched gold loan, they launched personal prime personal loan, vehicle loan, their education loan. So as the new products are coming, and because this portfolio, these loan books are not mature enough, because think with common sense that if I take a loan, okay, I am not going to default on the first month, second month. I might default after 6 months, after 10 months, after 2 years. So that is how the maturing of a book happens. Like as the book matures, the NNPA, GNPA comes from the book. So that is the point we have to look at, as they are expanding very fast, at a very fast rate. So we have to keep a look on GNPA very closely. So that is the point. So that is what I said, that yeah, because they are expanding at a high pace in terms of the new product, also in terms of the old product also. Because if I talk about their segment wise growth, lab book grew by 128% year on year in this quarter, which is like 128% growth in the lab book. In terms of the MSME book, they grew their MSME book by 63% year on year in this quarter. So that is what I am trying to say, that as they are growing at a high pace, asset quality might be a problem in the future. But yeah, do not make any judgment about that. We have to keep tracking the asset quality, because as we know that in NBFC distributing loans are very easy. It is very easy. If you stand anywhere and say that yeah, I will give 10,000 rupees to 100 people, so you would see that line, in that line thousands people are standing. So that is the point. In NBFC, distributing of loan is very easy, but the thing is that how they are collecting the loan, how they are collecting the EMIs. So that is the point with asset quality and GNPA. In terms of their credit cost, quarter on quarter they improved their credit cost by 53 bps. Okay, so in terms of the credit cost, they improved quarter on quarter. there is no point talking about the year on year, because year on year this would be pretty high. Okay, if I talk about at a overall level, the credit cost is at 2.6%. But if I talk about the X STPL portfolio, then the credit cost is at 1.43%, which is pretty lower than the overall level. And that is what happens, that if one product get misfired, then the whole portfolio becomes like what you can see with the Poonawalla, that they faced some kind of issue in STPL in Q2 FY25. The whole profitability was like blown away. Okay, so that is the thing. So in terms of the credit cost, as I said, they improved quarter on quarter. There was no accelerated write-offs also in this quarter, so that is another good thing, that the slowly the asset quality is improving. And if I talk about the STPL book also, in the last quarter STPL book was around 8% of the whole AUM. In this quarter, that is around they bring down STPL book at around 4% of the whole book. So they are also reducing the STPL book because it is a high risk book, short term personal loan. It is a high risk book, and they faced some kind of, I mean, not some kind of, but a big issue in that book. That is why they are bringing down that book continuously for last 4 quarters. So that is the point with credit cost, and they are expecting a better credit cost in coming quarters, like they are expecting 1.5 to 2% of credit cost in next 1 to 2 years. Okay, whereas now it is at 2.6%. Okay, so they are expecting a improvement in terms of the credit cost. In terms of the Opex, if I talk about the Opex, was high because of the new product they are launching. They opened 80 branch of gold loans, and they are planning to launch another 300 branch in gold loan. They are planning to open 400 gold loan branch by FY26, which is a pretty big expansion. So that is why Opex is little higher, and also they are opening new product. So that is the main reason of the higher Opex, and they are expecting the Opex to settle down after Q4 FY26. So that is the Opex. In terms of Opex also, they are expecting a improvement after Q4 FY26. So that is the point with Opex. ROA, in this quarter, their ROA was at 0.68%. Okay, and their guidance is at like 3 to 3.5% ROA by FY27. So in terms of ROA also, they are looking for a better ROA in next 2 years. So that is the point with ROA also. And in terms of the leverage also, they are looking to improve their leverage ratio also to like 6x kind of a leverage, because as we know that Poonawalla Fincorp is a company of Poonawalla Group, so they can do high leverage on their equity base. So that is the point they are trying to do, like increase the leverage to improve the ROE, improve the profitability. But yeah, leverage is it can kill you, it can like give you some great return. So that is the point with leverage. In terms of the PAT, in this quarter, obviously PAT was low because of the year on year. If we compare it to Q1 FY25, PAT was really low because of the credit cost. Obviously year on year credit cost was like 4x So that is the thing with PAT level. Okay, so in terms of the quarter on quarter performance of PAT, PAT was flat quarter on quarter because in Q3 FY25 their PAT was at 19 crore. Then in Q2 their PAT was at 62 crore, and in this quarter the PAT is at 63 crore. So in terms of the PAT, there is no growth quarter on quarter, obviously because of the low NIM, high credit cost, high Opex. So all of that came here, and that is the reason of the lower PAT in this quarter. So that is the point with PAT, but we have to see that how this PAT grows in the like next 2, 3, 4 quarters. So that is the point with the PAT. So in terms of the whole company, Poonawalla still in a position where it is in between nowhere. I can't say it is going in a bad direction, in the negative direction. Also, I can't say it is going in the right direction. But yeah, things are improving. That is what I can say, because as we can see, the credit cost, the GNPA settled down to a level, credit costs are improving. So yeah, it is like in the place of like nowhere, in the no man's land, it is standing. So that is the point with Poonawalla Fincorp. We have to track the business because their AUM growth is pretty high. So if they can manage their asset quality, then everything will be like pretty good, pretty amazing. So that is the point I can say. So I do not think I left anything to say. So I think that's it for the video. Thanks for watching.